a majority of the people are really focused on fixing their credit reports, right? Enhance my credit report, remove those negative items. Let me get some funding. Here's the greatest picture that I'll ever give you when it comes to value. One of the critical factors when it comes to enhancing your personal financial value, and we're going to talk about the personal net value pie. And personal net value pie essentially means how you can actually transition from where you are today to the wealth and the prosperity that you want tomorrow. And along the way, you have to establish certain things. And this pie chart will show you exactly what that is. The first thing you need to concentrate on, right, is understanding the holistic image. A lot of people think that the credit reports are basically what creates the financial outcomes they want, right? If I get a good credit score, I can get some funding. That's true, right? So most of the people are just so focused on the end result. It's like, hey, how do I fix my credit so I can get maximum funding? How do I fix my credit so I can go and get some money and I can buy some business? How do I get some funding so I can get some leeway with financial capability so I can afford more things and not have to worry about paying everything up front with cash? A lot of value factors there. But today's conversation is quite interesting because even though a lot of people focus on the end result and a lot of these gurus will focus on the end result, I want to walk you through the process where you don't have to worry about the end result only, right? We're going to talk about the entire deal pie. We're going to talk about the personal net value pie, and that's where I want you to concentrate your attention to today. First thing you need to understand, right, about this whole pie is that the outcome that you're trying to achieve, whether it be on a personal level, funding, business, whatever the goal, credit reports are only 5 to 10%, right? Because the rest of the pie goes deep into understanding what are some of the factors that create, the financial layout and presentation about who you are as an individual to your potential lenders, creditors, or anybody that you're trying to borrow money from. So the credit report itself is essentially just a spitting image of your performance in all the other areas of this pie. So a lot of people focus so much energy on I want to fix my credit reports. I want to fix my the way that my reports look. I want to get the perfect credit model. I want to go out there and borrow. The problem is you're focusing so much of your energy, almost 100% of your energy, on the actual 5 to 10% of what actually matters. Now, of course, that's important. You can actually remove some negative items, fix your credit, enhance it, and essentially borrow what you need to borrow. But if you want to move up the net value pie, and the net value pie essentially means you can borrow much more, right? You can go out there and build a lot more wealth if you understand this model correctly. And my goal here today is to give you some insight on how those factors can be influenced for you, so that your net value pie on a personal level can be as high as possible, so that your credit report, even though it's a 5 to 10% of the actual outcome, is going to be nice, right? So let's talk about these points and break them down so that you can get a better perspective of what you need to do and focus on. First thing we're going to talk about is what we call the financial performance. So a lot of people in the credit reporting industry will tell you, hey, look, don't worry about it. We'll remove your negative items and we'll try to get rid of those bad debts, these collection agencies, these late payments, public records, whatever the case. But here's the problem, right? That can be done, and you can definitely obtain some financing and credit based on the removal of those negatives. Here's the how do we say this? The oxymoron in this situation. Here's the issue with it. Over time, right, there's going to come a point in your life that you're going to probably want more. You're going to probably want more income. You're probably going to want more assets. You probably want to want more net value. And it's not a question of whether you like it or not. It's not a question of whether you desire it or not. It's a question of your needs, right? And the reason I say that is because the cost of living is going up. It's not going down. So you'd be forced to enhance your financial performance if you want to stay up to standard with society anyways, right? Now, the only difference is whether or not you're actually outperforming the societal standards or you're staying with it until essentially you can't move out of it. It's like it's boxing you in. You're like a prisoner, right? So if you focus so hardcore on your credit reports, you're not paying attention to the other areas of your net value pie. What ends up happening is you're actually falling behind. You're suffering. You're going to be, tremendously, inadequate in terms of the standards, not only on a financial level, but also at the same. What are some of the things that you're, leaving behind? What are some of the opportunities? What are the costs of those opportunities for you not taking action? So financial performance is actually 25 to 30% of your net value pie. All right, if you don't focus on enhancing your financial performance, it could be through income, it could be through increasing cash flow, it can be through paying down debts, not borrowing more and maxing it out, because that increases the level of the debt that you have to carry, which ultimately decreases your financial performance. because that means you cannot allocate your capital to where you need to, right? You're tied to a certain structure that you have to pay every month, right? You're indebted to it. Now, of course, you can leverage. Leverage is never bad, but the goal here is not to make the financial institutions more money, right? The goal is to increase your net value pie, which is you need to make more money. Now, as the cost of living is going up, as certain things are progressing the way they are, your net value performance and financial levels are very low. So if you're just 100% concentrating on credit reports and essentially borrowing, you're crushing your financial performance. You're decreasing that, right? So you have to look at the holistic picture. So like I said, 25 to 30% of your net value pie is your financial performance. So where are you tomorrow in terms of, well, what kind of debts do you have? What is the income capability? Can you increase that? Can you reduce your debt load? Can you reduce your payments? Can you increase what you bring in? Can you start a business? Can you acquire a business? There's so many levels of financial performance that we can get deep into, right? But what I'm trying to tell you here is that's actually 25 to 30% of your net value pie. And I'm gonna give you the holistic picture of the net value pie and what it can do for you if you do it the right way. So don't focus too much on the credit reports. That's very good. You want to get some good credit. You want to get some funding. But if your financial performance hasn't changed from the past years, and the only thing that's different is a 5 to 10% of the impact on your net value pie, it's not significant enough to move you and perpetuate you forward to build your wealth and to transition you comfortably to be ahead of the societal curve and not the same and be stagnated and held back because you decided that you just want to concentrate on shortcuts. Not against shortcuts. You can shortcut financial performance. You can actually shortcut the net value add-ons, right? And you can shortcut your bankable relationships. But if you're not shortcutting the right areas and you're focusing on the wrong ones, what's happening is as you shortcut your, shortcut of the, let's say, credit reporting side and you just want to quickly turn things around, what's going to end up happening is to catch up on the other areas, it's going to take you a lot more energy and effort. And that's going to hurt you and cripple your ability to basically become wealthy ultimately, right? So what is it that you want to leave your kids behind, right? Do you want to leave them only thing that you have is a good credit report? Because they can't use it after you pass away, God forbid. The only thing they have left is the other areas, right? So the net value pie is something that you have to transition to your generation. So if you're not concentrating on the other areas, which is the greater portion of your net value pie, then your kids are basically getting debt instead of real value in terms of asset, in terms of financial performance, in terms of the spitting image of what you created in society. Did you outperform it, right? So that's a very critical factor that you have to concentrate on, right? So like I said, financial performance is one of those areas that you really have to focus on because it's actually 25 to 30% of your net value pie, okay? Next thing you want to concentrate on is your bankable relationships, right? A lot of people say, well, Ali, what do you mean by that? If I get good credit, I can go out there and borrow credit. I'm already doing good with the banks, right? That's not the objective. The bankable relationships means how frequently and obviously are you depositing assets in their institutions, right? Are you depositing cash? Are they able to look at you and say, well, this is a credit-worthy customer? And it's not just borrowing debt, but you're actually enhancing the value of your assets. So if you're buying a real estate transaction or falling into a real estate transaction and you're going in multifamily and your bankable relationship essentially give you the leverage that you need, like financial partners with low interest rate, because again, your credit reports are the spitting image of the other areas of your net value pie, so you get a good rate. That can be enhancing the way you do things. So the bankable relationship is essentially how much of these financial institutions are partnering with you on their equity as well as your equity, right? So what I mean by that is your down payment plus their capital, right? Cash on cash. So if your bankable relationships are enhanced in such a way that, like, look, they have $1 million this year, and the next year, you have $10 million worth of transactions because the financial institutions decided to back you on those type of deals, and they make financial sense. Then what you're doing is not only are you increasing your financial performance because now you're getting cash flow, but at the end of the day, your banks, the relationships that you're building is also being enhanced. Because over time, what's going to happen is you're going to have to do some other deals, and the value of your financial relationships are increased. So the bankable relationships are between 30 to 35%. It's actually greater than the financial performance. And I'll tell you why. It's because your own money can only do so much. But if you do it with the financial institutions to enhance your wealth, because you're going to leave that to your next generation, then there's a lot more you can do, right? So the more bankable relationships you have, the more you can leverage for the right category. And by the way, the bankable relationships have to be in such a way that they actually influence your financial performance in a positive way. If they're not, then your net value pie is not going to create the outcome that you want, right? So think about your bankable relationships. Who are you going to be partnering with tomorrow with in terms of institution that has looked through our project, that wants to back you in terms of a hard asset or some sort of acquisition strategy that you know for a fact it's going to enhance your financial performance immediately, right? So think about those areas. So that's actually 30 to 35% of your net value pie. So we talked about financial performance and can enhance your income, reduce your debts, look at more cash flow. And how do you increase more cash flow? Well, you invest, right? So how do you invest? Well, you go to banks and you partner with them to buy assets that are performing and turn them around, add value to those assets, and essentially increase the cash flow over time, which is increasing your financial performance. So those are some of the areas that you have to pay attention to. Final round we're talking about is the net value add-ons. Net value add-ons are certain things that you can enhance in terms of your net value. Overall, it could be insurance, it could be hard assets, it could be gold, silver, whatever it is that you feel is going to transition in a positive way. It's going to outperform, let's say, the inflation, which is an average 3.5%, 3%, right? So all of those areas, let's say if you create net value add-ons, let's say you have real estate transactions through bankable relationships, and it increases your financial performance. You take some of that money back and then you reinvest it into value add-ons. What ends up happening is now your wealth pie is actually increasing over time. Every year that goes by, the value increases. Every year that goes by, your cash flow increases. And every year that goes by, the debts decrease, right? So you have a 2-to-1 factor. So if you can work through those strategies, what's going to end up happening is your credit reports are going to show on a positive note. Now, a lot of people say, well, no, that's not true. You have, credit card payments, all these type of financial performance around the credit that enhances your credit reports. The reality is, if you look at the ultra FICO model nowadays, they look at how much banks and the accounts you have. Check systems is being considered now with credit unions on a severe level on whether or not you can get approved for funding. You can have an 800 credit score, and if you're in check systems, they can deny you funding. So what does that tell you? That tells you that this is really minuscule compared to the actual impact you have with your bankable relationships and your financial performance. So if you want to enhance your value, if you want to move up the game of credit, if you want to move up the game of wealth, your net value pie on a personal level is one of the most important things that you can do for yourself. And I want you to really pay attention to it. So we're going to go over this one more time. First, your credit reports are only about 5 to 10%, right? Because at the end of the day, that is the spitting image of your performance in all the areas of your net value pie. Next, your financial performance is between 25 to 30%, which means that you have to focus a lot on increasing your value and income. You got to outperform societal standards. You got to increase the assets that you have. You got to decrease the debts that you carry. You can have a lot of credit cards, but if your debt is not carrying a lot, which means that your utilization is very small, you have a lot of utilization actually, and your debt balance is really small, your financial performance will be good. Next, you want to increase your bankable relationships. That's between 30 to 35% of your net value pie. That means that every transaction that you're doing with a bank that increases your financial performance is adding to your value pie, right? So that means if you're buying real estate, you're putting a down payment, they're backing you in the transaction, and the properties are cash flowing, let's say a multifamily, for example. That is basically working hand in hand with financial performance. So that's very powerful. The more of those you have, the better for you, right? And then the final element to it is the value add-ons. What are some of the things that you can re-engineer your financial performance, your bankable relationships to increase the level of assets that you carry to the next generation? And one of the fastest way that you can actually do this is obtain an insurance policy, a life policy. Now, disclosure, I'm not an insurance representative. I'm not trying to sell you that policy or trying to give you a hint of it. I'm just giving you information that you have to think about, because at the end of the day, let's say something happens, God forbid, and you have a $500,000 policy. All of a sudden, that's actually added to your net value pie, in addition to all the other asset classes that you have, your financial performance, ongoing basis, and your bankable relationships. The objective is to remove your personal dependency on the financial performance. Because if you work with bankable relationships to enhance that, eventually you can retire from whatever you're doing. It could be work, it could be just whatever business you have, and your net assets, like net value add-ons, are enhancing the way that you work. You can actually borrow against it. More banks are willing to finance certain type of assets, and it just perpetuates forward, right? So don't just focus on the credit report, right? Credit reporting is good. You guys have the strategies in this channel. You can go through all that information and of course borrow. But at the end of the day, like I said, you have to transition. You have to outperform society, or you'll be stagnant, and it's going to be very hard for you to catch up, right, on the other areas of your net value pie, which is, again, financial performance, bankable relationships, and the value add-ons on a personal level to increase the level of your assets and your wealth ultimately. So I hope you found this video helpful. I'll be going over a couple more series in terms of videos in the next couple of days with you guys. I know I have to catch up on it quite a bit. And I hope that if you like this video, give it a thumbs up. Leave me a comment below on what are some of the things that you learned. What is interesting about the net value pie that you found is connected with you? And what are some of the actions that you're going to take this seriously and improve your either financial performance, bankable relationships, and or your value add-ons? With that said, this is your guide and mentor, Ali Tarafdar. I'll see you guys next time. Bye for now.